This is our Forex blog for February 17th, 2012. And like we do most days, we want to buy the strong currencies versus the weak and sell the weak versus the strong. We look at the statistical strength comparing the dollar to all the other pairs and vice versa. And this histogram on the top is the real-time strength or weakness. It's made up of 5 of our best statistical trend tools we've created over the last 6 years. 3 of them measure the direction the dollar is moving, and 2 of them measure the intensity of direction. So any movement you see that's under the 80 level is really insignificant. Anything at and above the 80 level shows weakness if it's red or strength if it's strong. You want to primarily focus on the real-time momentum, but underneath that we have the daily, weekly, monthly trend, which is made up of 3 of our statistical trend tools. So ideally you want to see weakness in the dollar because it's so weak here. Same thing here with the yen. When the weakness shows up because it's one of the weakest, actually it is the #1 weakest longer term trend, you want to focus on selling it. So ideally you want to find a currency that's strong or at least green on all time frames like the pound and the yen that's weak right here, and then buy the pound yen after 4:30 or so. Let's take a look at a lot of times you miss the first wave of the move, but if the trends are strong enough, typically they continue. So here's the pound yen. Let's look at 4:30. Here's 4:30 right here. Notice this made a move up. Also, it's above the previous day's high, which is bullish. You have this, if you were watching this currency, you would trade this pullback. It found support at the previous day's high. It started to go back up. You go along with your stop underneath here, and notice how well our intelligent trailing stop does at getting you out. These are Fibonacci profit target levels that I spend 30 to 40 minutes each night from my own trading doing, and I've done it for years. And I put them into the software so that they show up on your charts as well. So you don't have to spend that 30 or 40 minutes every night doing that. I also use a statistical measure that I came up with that is a different way of doing Fibonacci's. I only showcase the Fibonacci levels that I think are most likely to get hit and act as resistance in this case. You can see it went right to that area and came down. Fibs are not an exact science, so the exact number is in the absolute middle of this, but I added some padding above and below just because a lot of times it comes within a few pips. People stop buying a few pips underneath the fib, and that's the level. But nonetheless, even if you miss this first move right here at 4:30, it goes up and you have a nice little flag pattern right here. Flag patterns are very high probability, especially after seeing a peak move up at or near or above the 80 level. And in this case, the daily, weekly, monthly trend is up. It's a no-brainer. You go long, and the fib target, because it's above our upper containment band, usually is an excellent place to get out of the trade. And also because of the counter trend signal right here, you want to look to sell. You want to look to sell the next wave up because it's very likely to give you some kind of decent pullback. So right here at 8 o'clock or so, it comes up to the fib target and also the fib target I did last night. It's also a monthly pivot level. We have another short-term counter trend signal there as well. It's a pretty high probability place to look for a short, and you can see the market pull back 10, 20, 30 to 35 pips. Another currency that was weak earlier in the day, and again, you can trade these to the downside. The Australian is weak coming in today and actually through most of the day. The euro is one of the strongest ones, so this is not one that I leave running each night, but you can buy the euro versus the Australian. If a currency's gone up or down so many days in a row, let's take a look at this one today. Notice how it just went straight up. If we go to a daily chart, period D, you can see that this thing has really gone down a considerable amount since November. It's down, 1,800 pips. And it appears that it's kind of found the bottom down here, and it's found, there's not a whole lot of fear causing big moves down. Notice this wave down, this wave down, this wave down. It just kind of went down a little bit. This is the smallest movement it went down in the last, 6 months. So also, if you notice previously, it tried to go up, it came back down at double bottom right here. This is one of the reasons why you should always look at daily charts to get a feel. And even though it is extremely weak and in a downtrend, it appears that it's kind of found a little double bottom there. So having strength in the euro today and weakness in the Australian was a pretty high probability trade to be going long. Let's go back to a 5-minute chart. And if you have our FX Trend Pro on the chart, you will see that looking at the swings of the up move with tremendous momentum, the down moves, like for instance right here, with 1/2, and in this case maybe 1/3 the weakness compared to the previous strength. Same exact pattern here. When you see this followed by this, typically it goes up. Big move up, pullback, and again, I usually draw fibs on the last wave right here, and look where the market went. So if you had bought this pullback right here, you might have got out of that trade, got back in it again here, and 2300 is an excellent place to get out with a profit target. And it's about 36 pips away from your entry right here. You risk 6 to 12 pips, with trades that are very likely to give you 20 to 30 pips, and you ignore trades that, in my mind, are just pure gambling. It's 50-50 whether they're likely to work or not. And if they do work, they're not going to give you more than what you're risking. The Australian, again, was weak today. For the most part, the dollar showed some strength, so you could sell the Australian dollar today. And primarily, you want to focus on selling it once it breaks from above to below the hourly. So you can see it's one of the reasons why we have the hourly moving average on here. It's used by a lot of the biggest traders in the world. When it comes down and finds support at the hourly, typically you get a bounce like you had earlier. When you don't get a bounce and it breaks down right here, you go short. And in this case, it went down a little bit and then pulled back up. You got stopped out pretty much at break even. You went short again right here, and you might have made a little bit of money. And when it breaks the low here, you go short again, and it goes down 10, 20, 30, 40, 50, 60 pips. So even, most people don't catch every pip, but out of those 60 pips, you could have easily made 30 or 40 of them, or at least 25. So if you have a 6 pip loss, a break even, and then a 25 to 50 pip win, obviously you can do the math yourself and see how trading high probability systems, if you take enough trades, you have small losses, break even, small wins, occasional big win, generally 20 to 25% of your trades maximum are going to be nice. If you trade the systems that we teach, going to be nice, 30 plus pip wins.